Welcome to the Cybos Daily Update. I'm Charlie Corbett, Economics Editor at The Banker. I'm joined today by Fernando Vicario, who is Managing Director for EMEA, Corporate and Financial Institutions at Bank of America Merrill Lynch. Hi, Fernando. Hope you're enjoying Cybos. What, for you, this year, is the big issue?
Charlie, nice to meet you. And the big issue is probably, in a very summarized way, probably those that I'm going to mention here. One is streamlining bank relationships, relationships between banks, and watch counterparties that you actually want to select for your future growth of business. In particular now, where we are in recovery mode, post obviously the credit crunch, which I guess is an important piece. Secondly, technology. What type of technologies are used and make them scalable for financial institutions is a big decision that requires obviously close attention, and which providers can really deliver. Thirdly, which I think is equally important, is probably around the access to funding. Depending on which side of the financial institutions world you speak about, access to funding, in particular also bank funding, continues to be an important theme, since the absence of access to capital markets for probably lower rated banks in lower rated countries requires obviously diversity of funding alternatives. And I think these are the issues that probably drive, other than one more important aspect. If you think about SWIFT in particular, clearly a platform to allow us to communicate better, safer, faster, and I guess that everybody is interested in leveraging what SWIFT has to offer. And as you know, we are one of the big promoters of SWIFT to our corporate and financial institutions clients.
Thanks, Fernando. In terms of how things are different, last year, of course, was the collapse of Lehman's, happened midway through probably exactly a year ago. It was a busy time for Bank of America too. So what are your thoughts on how things have changed this year? What's different?
There's one very evident change, which is the absence of a number of banks that have been absorbed, integrated, acquired, whatever you like to call it. And in our particular case, obviously we are now Bank of America Merrill Lynch, which is a significant change, but also an exciting change, because a number of banks, like ourselves, have now the opportunity to leverage globally their capabilities. With a much broader international footprint, we have a significant presence in emerging economies, and we have a scalable model, which is an integrated corporate and investment banking coverage model, where you don't only provide access to capital markets, which is crucial, and we have seen that capital markets have opened up again. The bond market is in particular good shape, but also the credit markets are relaxing, I suppose. But at the end of the day, you combine a raft of products to your financial institutions' clients, which go way beyond probably traditional product sets. So in our case, we have much stronger international debt capital raising capabilities. We are beefing up substantially our investments and our international readiness to serve our clients much more globally. And that gives us confidence that we will continue to capture market share.
Thank you. And so, I suppose, on to that, how has, it's been a very eventful year. How has that integration gone of Bank of America Merrill Lynch?
The integration between the two institutions is on track in a number of areas, I think ahead of plan. I can speak about my area. My area is an area which did not require an integration, because Bank of America had the transaction banking side in legacy Bank of America. So it's, if you will, business as usual, with one, however, important difference. We have plenty of new clients that have not bought transaction banking services from Bank of America, and those clients we will obviously market actively to cross-sell beyond what Merrill Lynch, for example, used to sell and offer in EMEA. But to your earlier point, obviously the markets have changed. There are less competitors, and there's therefore probably the need to make sure that you have a reliable supporter in your bank It doesn't matter who you serve. It's corporates or financial institutions clients, folks that really can provide broad-based support.
And finally, just to wrap up, what do you hope to achieve this year?
Cybos offers a number of opportunities. One is, of course, to present yourself with your new capabilities, in our case, especially now that we are a much larger and broad-based institution. But secondly, the aim is to meet your clients. And we have obviously a large number of client meetings, which there's no other place probably where you can efficiently see so many clients within just 4 working days. That's a great opportunity. Apart from, of course, another aspect which I suppose is important, the simple network opportunity rather than the one-to-one client call helps you also to understand what are the trends, what are the priorities, where are our clients but also competitors going. So probably in summary, no doubt that Cybos is an excellent platform for the financial institutions business for any bank.
Fernando Vicario, thank you very much.